Welcome to the Investors Chair podcast with Ivan Sambo. Explore investing, saving, and budgeting in South Africa. Remember to like, share, comment, and subscribe.
Wonderful people, welcome to the Investors Chair podcast with myself, Ivan Sambo. Today's conversation is around the 5 steps to follow so that you can properly invest into the JSE with as little as R1000. I'm using R1000 as an example, but this strategy, the 5 steps to follow, work with whatever amount of money you have. So this R1000 is just as an example. So we need to talk about how exactly can you as an individual yourself invest into the JSE with R1000. And guys, the 5 steps that you need to follow in South Africa to ensure that you can properly invest into shares and ensure that you see growth, you see good performance for your investment portfolio that you're building for yourself. The first step is what we want to talk about right now, which is choosing a regulated low-fee investment platform. What do I mean about that, guys? In South Africa, you cannot go directly to the JSE in Johannesburg and knock on their doors and say, I want to buy shares. You can't go directly to the JSE website and say, I want to buy shares, or even call them. You cannot. So you need a registered broker that's approved by the JSE and also approved by the South African Financial Sector Conduct Authority. You need a broker that's approved by both of those bodies, basically the JSE and the Financial Sector Conduct Authority. That you need a broker like that so that you can be able to buy shares. The broker acts as a middleman between yourself and the JSE so that you can buy shares, right? This broker must always be a registered, low fee and easy to use platform, right? There are a lot of them. I have 5 right here to use an example, right? We have Easy Equity. Easy Equity is one of the most popular ones in South Africa. It charges 0.25% brokerage fee per trade. There's no platform fee. Also, it allows you to invest through what's known as fractional share ownership, meaning that you can invest with as little as R1 for yourself. But do remember that when it comes to Easy Equity, there's also that R25 monthly fee that you also pay. It's called, I forgot anymore what that fee is for, but it's that R25 monthly fee that you pay with Easy Equity. And Easy Equity is registered by the JSE and approved by the Financial Sector Conduct in South Africa. There's also the StarTrek Now app, which also is like a 0.2% brokerage fee per trade and a 0.5 annual performance fee on your first R500,000 that you pay as well. StarTrek mostly focuses on exchange traded funds, ETF, which we'll talk about a little bit as we go along around this conversation. And StarTrek Now app also, guys, allows you as well to trade into unit trust as well as your tax-free savings account. It's one of the most, I love StarTrek Now app, guys. By the way, the brokers I am talking about that you can use as your investment platform, majority of them are apps that you download into your phone. I just want to put it out there, guys. You don't need to call Easy Equity. No, you download the Easy Equity app into your phone. You download the StarTrek Now app into the phone. If you're using FNB, there is the FNB Share Zero, which has zero brokerage fee if you use the ETF that belong to the FNB group. And the other investment that you can do inside the FNB Share Zero, they will charge you around 0.25% or per share, per trade you're doing inside the FNB Share Zero. And with nice thing with FNB Share Zero that you can go directly to your FNB branch and they can assist you setting up the FNB Share Zero system for yourself. Standard Bank also has a similar thing. It's called the Standard Bank online shares it's called a Standard Bank online share trader. As well, you can also go directly to Standard Bank branch to help you activate it inside your Standard Bank banking app. The same with the FNB one. Capitec Bank, I know inside the Capitec Bank app, you also do get the Easy Equity widget, which you can use to invest via FNB, but using Easy Equity as your broker to buy shares in the JSE. There's also the Brostock app, which you can use for yourself. The Prostock app, guys, charges between 0.1 to 0.3. On brokerage, there's no platform fee, no minimum investment as well. So those are the typical investment platform which can be your broker that are low cost that you can use to buy shares. So the first step is just to get a broker that you can use. And I always say go to a low cost, easy to use investment platform that will become your broker. The ones I just mentioned are a good example of that. Step number 2, guys, is to define your investment strategy. You have 1,000 rand a month. You need to find the strategy on how can you divide that 1,000 rand in a manner that makes sense for you, right? Because when you divide that 1,000 rand in a manner that makes sense as a strategy, you're also trying to aim for diversification, to diversify your investment strategy. What do I mean about that? When you're investing into shares, you need to diversify your investment strategy so that you don't incur a lot of risk, so you don't suffer a lot and lose money. But you need to ensure that you are dividing that 1,000 rand so that you know if you make a loss this side, at least you're seeing growth this side, or if you are making a small amount of growth this side, at least you're getting passive income in one other investment. So typically, if you have 1,000 rand, you don't need to stress yourself that much about dividing your money based on regions. But I always say, what do I mean when I say divide your money based on regions? I mean like, okay, I want to be in the United States, I want to be in Australia, I want to be in the London market, I want to buy shares in Brazil. You have 1,000 rand a month. You need to be realistic and say, let me stay in the JSE and let me use the JSE to diversify my portfolio. And how do you do it? You look into ETF, you look into dividends paying shares in the JSE or REITs, or you look into individual growth stocks. What are those? Let's explain them one by one, right? Obviously, you have 1,000 rand. You'll be investing most likely in the JSE, because going international with 1,000 rand, from my own personal point of view, I think you'll be incurring a lot of risk and you won't be seeing that much growth. So, rather stay in the JSE and diversify while you're in the JSE. With ETF, guys, ETF allow you to explore a broader market. There are ETF is like a basket, guys, of different shares grouped in together, or an ETF can be a tracker of a specific market, but the tracker is listed in the JSE. For example, there can be the ETF in the JSE tracking the S&P 500, meaning this ETF is listed in the Johannesburg stock market, but it's tracking the American top 500 S&P companies. Your Tesla, your McDonald's, your Visa, your Coca-Cola is tracking their performance, but it's listed in the JSE, meaning you are buying it in rands here in South Africa, but you're getting the performance of all the top 500 companies in America while you're in South Africa. So those ETF help a lot. So when you're dividing that 1,000 rand you have, looking into ETF is a good idea. The second investment asset you can look into is the dividend paying stocks or REITs companies. Why do I say dividends paying stocks and REITs companies? It's because you have 1,000 rand. So you want an investment asset that can give you passive income so you can be able to reinvest it into creating more wealth for yourself and creating compounding income. So companies that pay dividends are good in giving you passive income that you can use to buy more of that specific company and create what is called compounding interest for yourself. For example, let's say you buy shares of, with that 1,000 rand you have, you take 200 rand, for example, you buy shares of, let's say Impala Platinum in the JSE, right? You buy them with 100 rand, and Impala Platinum gives you a 20 rand dividends once a year. You take that 20 rand with that 100 rand you have, you combine it, you keep on buying more of that company, now buy with an extra 20 rand that they gave you back, meaning now you're using the same money the company is giving you to buy more shares of the company, increasing the value of your portfolio, increasing the dividends you'll get next time. I hope that makes sense. So dividends paying companies also something you need to look into as part of your step 2, which is defining your investment strategy. Look into dividends paying companies and REITs. REITs, guys, are real estate investment trusts which are listed in the JSE. These are companies by law which are focusing on property investment or property management or property development, and by law must pay back 75% of their taxable income back to you as a shareholder, and you take that dividend, that taxable income that you pay back back to you as dividends, you reinvest back into that company, buying more of that company, creating compounding interest for yourself in that investment. The third investment strategy you can look into doing as well. Remember, you can also do it. You can do ETF, invest into dividends paying stocks, as well as invest into individual growth stocks together at the same time with that 1,000 rand, because you're dividing that 1,000 rand into companies that are in the sector. But I'll explain more into step 3. So another investment strategy you can use is to invest into individual growth stock. Invest into individual growth stock. English there, guys, forgive me. So what do I mean about that? I mean invest into JSE listed companies that by design, that by purpose, they're still young, have a lot of growth potential to have. Or maybe it's a company that had a lot of financial issues back in the days, or back in 2010, whatever the case may be. It struggled, now it's trying to rebuild itself, meaning there's a lot of growth possibilities in this company. And when you invest into it while it's young, you have the high chance of it becoming a huge company and using a huge amount of growth for yourself as well with your investment. For example, let's say you invest into shares of PPC Cement. PPC Cement is struggling financially now, right? You take your money, you buy shares of PPC Cement for 2 rand per share. You keep on buying, you keep on buying, you keep on buying. In the next 5 years, let's say that company, when you started buying, the share was 2 rand per share. In 5 years, the share now is plus minus 20 rand, meaning you have made plus minus 10-fold growth in your investment, basically, which is a lot. It's a lot, right? So those things it's possible to look into growth companies. I'm not saying they are guarantee, but they are a possibility. So now I have talked about the investment strategy, defining your investment strategy. Also, within defining your investment strategy, also define what type of investor you are, because sometimes you may look, okay, let me buy ETF, but you must buy ETF that meets the type of investor that you are. So spend time to research whether are you a conservative investor, are you a moderate investor, are you a high risk investor, right? Spend time understanding the type of investor that you are. There's a lot of research out there that can help you identify the type of investor that you are. But typically, if you are young, don't have a child, don't have a lot of financial obligation, typically you are very most high to take more risk, so you can invest into a lot of assets that are very high risk assets. If you have a child, you're still young, but you have a little bit of stable income, you're a moderate investor, you can take risk but not too much risk. But if you have a kid, you have a bond, you have a car payment, you have a lot of other responsibilities, you can't take a lot of risk. So you're conservative, you stay within your shop, right? You discover your well-established company. So it's very good to also be aware of that. So now let's go to step number 3, right? What is step number 3? Dividing your 1,000 rand per month you have effectively. What do I mean, right? As I said in step number 2, that you must define your investment strategy and look into ETF, dividends paying stocks and REITs, look into individual growth stocks, right? In step number 3 is now how do you divide that 1,000 rand you have into those 3 strategies, right? Those 3 investment strategies. Let's say, for example, this is an example. I'm saying do it like this. Do it in a way that fits your investment strategy and the type of investor that you are. But this is the average example I'm going to use that will work for everyone. I'm not saying this is financial advice, right? Let's say you have that 1,000 rand per month you want to invest. How do you divide it? Let's say, for example, take 500 rand, you put it into ETF, right? ETF, let's say you pick 2 ETF. You have 500 rand. Remember, we have 1,000 rand. You're dividing you have 1,000 rand. You're dividing that 1,000 rand into 3 groups: into buying ETF, into buying dividends paying stocks, and in buying individual growth stocks as well, right? Meaning shares that are growth, dividends paying shares, as well as ETF shares. So you're dividing into that. So in that 1,000 rand, you take the first 500 rand of your 1,000 rand, you put it into exchange traded funds. You buy 2 exchange traded funds, for example, right? Let's say you take that 500 rand, you take 250, you buy the Satrix Top 40 ETF, which is an ETF that covers the top 40 biggest companies in the JSE. Over the past 5 years, guys, the Satrix Top 40 ETF has seen a return of an annual return of 10.6% in the past 5 years. So a very good investment for you in ensuring that you are stable in the South African market, because I think we have the South African top 40, top 40 ETF. I think you are covered in the South African market, right? Then you can say, I want to go international as well. Then you can pick the Satric, I'm just using Satrix as an example, guys. You can pick any ETF you want. You can pick the Satrix MSC World ETF, which has also seen around 13.2% annual return in the past 5 years as well. Or you can pick the One Invest S&P 500, meaning you now be invested into the 500 biggest companies in the New York stock market, meaning America. You can pick that one. Buy the Satrix MSC World ETF for 250 and buy the Satrix Top 40 ETF for 250, meaning your 500 Rand of ETF investment is covered. And the nice thing with those two investments, the first investment you've made with a 500 Rand from your 1,000 Rand, is that now you are fully invested into the South African market with the top 40 biggest companies in South Africa. Bought them once with the Satrix Top 40 ETF. And in terms of the international market, you are covered as well with the Satric MSC World ETF or the One Invest S&P 500 ETF. You are covered in the global market and you're in the local market as well. You are fully covered, you're diversified, you are sharp, Ukraine, right? Now, that means your first 500 Rand is gone. You've invested it into ETF. Now you're left with a second 500 Rand. You divide the second 500 Rand into two. You say 300 Rand, I'm putting it into dividends paying companies. You're looking into companies that pay a lot of dividends. For example, companies like, let's say, Growth Point, for example, right? I'm using it as an example. You invest into buying shares of a Growth Point company in the JSE. You put into, let's say, 150 into it. You look into Impala Platinum, you put 150 into it. Typically, companies pay 5% dividends, annual dividends. That means a year in at 150, you get 8% dividends paid back to you. You take that 8%, you use it to buy more shares of a specific company, creating compounding interest for yourself. Right, so every month they put that 150 into the shares of that one specific dividends paying company. There are a lot of dividends company paying in South Africa. Company that pays a lot of dividends, the likes of Growth Point, the likes of Impala Platinum, Discovery. There are a lot. You can pick 8. I'm just using Growth Point as an example, right? You pick 2 of them, you invest into them every single month. You put at 150 there, 150 there. That's your 300 Rand. That's forecast into dividends paying companies in the JSE. What does that mean now? That means you spend 800 Rand of your full 1,000 Rand per month that you invest. Remember, you are investing this, you're buying every single month. Every single month, you are putting in that 1,000 Rand in the same strategy that you have chosen, right? Now you're left with 200 Rand. The 200 Rand you can put into a high quality JSE listed value company. That means growth company. So the company that you see there's a huge potential of growth into it. This is a company. Most of the time when you talk about the growth company, some of the company you think will have the highest amount of risk and the highest amount of rewards and return in your investment. So this company is a company that you know you're gambling, not gambling, but you're taking high risk into it. Companies like your PPC Cement, your Purple Group, your Sun International. These are companies you know they're high risk, but you're just hoping based on your own individual research that they will grow very fast and you can see good return in it. But also there's a potential that you may make losses in this company as well. Some of them see up to 20% growth a year. Some of them can see a decrease of up to 25%. So it is high risk companies you're taking here. Some of them don't need to be high risk, can be growth companies that are very well established. Your Capitec Bank, your ShopRite, your M10. It can be those as well. You pick, then you maybe pick 1 or 2. Pick 1 or put the entire 200 Rand there, or pick 2, put 100 Rand, and just like that, the 1,000 Rand a month, you know how to invest it. Remember, you know 1,000 Rand a month, you take 500 Rand, you divide it into 2, you buy an ETF that focuses on South Africa, maybe the South African Top 40 ETF by Satric, or the Satric RIS ETF that focuses on the mining company in South Africa. It's up to you. Pick an ETF that covers the majority of South African markets. Then that's the first 200 Rand, 250 Rand, and the second 250 Rand, you go into international. Either you pick the S&P 500, or you pick the Nasdaq, or you pick the Satrix MSCI World ETF. You pick one of those, you put a 200 rand there. You know you're diversified. You have international, you have local. Then you're left with 500 rand. You take 300 rand, you buy two high dividends paying companies, your Growth Point, your Discovery, whatever, high dividends paying company, your Impala Platinum, you pick two high paying dividends companies, you put 150 each, just like that, 800 rand gone. Now you're left with 200 rand in your 1,000 rand a month. You pick a high value, high growth, a company that you think can see a huge amount of growth, but also carries a large amount of risk as well. You maybe your PPC Cement, your People Group, your Afromat, or it can be a very well-established company with high potential growth in it, your Capitec Bank, your MTN, your Sasol even, it's up to you. Then you put that 200 rand you're left with. Whether you put 100 rand in, buy two companies, 100 rand, or you just buy one, put 200 rand into it. So that's step 3, dividing your monthly 1,000 rand effectively. Step 4, guys, is automating and monitoring your investment. Ensure every single month you are getting paid on the 25th of every single month. You make it with your bank, you speak with your bank to make an automated transfer from your salary into your broker account, into the broker you're using, whether it's Easy Equity, Pro Stock, Satrix Now, whatever broker you're using, make it automatic. So every single month, when you get paid, the 1,000 rand just leaves your bank account, goes straight to your broker. You just go there and you buy the shares you want. Or if your broker allows automatic rebuy, just then debit your bank account, make it like that. Automate your system so you don't have to every single time think about it, right? Not only that, guys, monitor your investment every single month. I don't love monitoring every day or every week. I monitor my investment once a month when I have to buy again and check what is happening. So guys, do ensure you monitor your investments, see what's wrong, what's right, rework if there's something wrong. There's a company that you bought, you think, hi, the research I did was not enough. Do again a research, you're not happy again. It's okay to sell and buy another company. That's always okay as well. There's a lot of websites you can use to ensure that you're monitoring and tracking your investments. Website like MoneyWeb, FinMe app. I'm not sure. I haven't used FinMe app in a while. I'm not sure if they're still there. Yahoo Finance, Google Finance. They can also help you with the news that affects your company, what's happening there. You can set alerts as well to get the latest news about the companies that you're investing into. So always monitor, research, and automate your system. That's step number 3. Step number 5 is stay consistent and scale up as well. You may start with 1,000 rand per month now, but set a goal and say next month after 6 months I want to increase it from 1,000 rand a month to 1,100 rand a month, and after 6 months I will increase it by 100 rand. Stay consistent and always wanting to upscale your investment as well. So if you're doing 1,000 rand a month now, next month after 6 months aim for 1.1. After 6 months aim to add another 100 rand, make it 1.2. After 6 months aim to add another 100 rand, make it a 1.3 every single month. And also, not only that, but always scale up. But also, if there's financial issues you're facing, it's okay to sometimes pause in your investment. I know a lot of people don't say that, but I say it. Because sometimes people stop investing because they reach a stage where they're financially drained, don't have the energy anymore because they're trying so hard to stay consistent. Consistent doesn't mean you must sacrifice your financial stability, your mental health. Sometimes there's a month I'm going through a lot. I am struggling financially. Pause. It's okay to pause. It is okay to pause. But the key is to go back and continue where you left off. So if you are planning to after 6 months, I'll upscale and from doing 1,000 rand a month to after 6 months I'll do 1.1. The next after 6 months I'll do 1.2. But the next 6 months there's a lot of things I'm planning to do. It's okay to upscale. So let's go back to 1.1. Okay, let's go back to 1,000 rand a month. That's also okay. Remember, this is not a sprint. This is a marathon. It's a long run. Because we stay consistent. Let's say, for example, we stay consistently investing 1,000 rand a month for 10 years with an annual return of 10%, just an average, right? Annual return of 10%. You invest for 10 years, 1,000 rand a month. After 10 years, you can be sitting with around 200,000. Because it's not 200,000 rand, right? After 10 years, you can have that amount of money for yourself. And if you upscale, you can even have more. It's all up to you. So step number 6, stay consistent, always upscale, always review, and sometimes okay to take a break, pause, and rework things. So guys, that's how you can invest 1,000 rand for your month in buying shares in the Johannesburg stock market and ensuring that you can be able to see growth in your investments. Until next time, guys, I am Ivan Specialist Sambo, and this is the Investors Chair podcast. Be safe, guys.